Welcome to the Pocket Option channel. I'm Ernest, and today we're going to talk about why a small deposit is not a sentence. We'll discuss how to effectively start trading with a small deposit, why it's actually an advantage rather than a disadvantage, contrary to what many might think. We'll tell you about the most effective strategies specifically for small amounts and list all the possible mistakes beginners can make when just starting their trading journey on our platform. A small deposit of $50 or $100 actually gives you the opportunity to learn, gain some experience, and then start trading with a larger deposit, armed with a wealth of knowledge. Now we'll talk about all the common mistakes that beginners make, and you'll see that, on the contrary, this is actually a huge advantage for you, even though the amount really isn't that big. How do most beginners think? They watch some videos on YouTube, including ours, and think that everything is quite simple and straightforward. They think, now I'm going to take on big risks. Yes, I'll trade without following money management rules. I'll trade with about 30% of my deposit or even 10%. And then once I've earned around $1,000, I'll gradually start reducing my risks. But in reality, this is one big myth. And this always leads to you losing your deposit. Yes, of course, even on our channel, there are videos about rapidly growing a deposit. But you need to understand the risks that these strategies carry. And when we do this kind of thing, we realize that it might not work out and we are prepared to lose the entire amount we initially invest. As a beginner, however, you should take a more conservative approach. In other words, you should build a long-term trading strategy so that you can gradually, step by step, grow your capital without a high risk of losing everything. So in this first point that I already mentioned, that you shouldn't try to rapidly grow your deposit and then reduce risks, another important idea is to set realistic goals. Treat your small deposit of $100 as if you had $100,000. Really count every dollar, value it, and try to enjoy the process itself, and above all, gain experience. And the second important rule, understand that losing trades will happen too. They exist and they will always be there. You shouldn't treat them as something bad. Just analyze each of your losing trades and try to get better every time. Look at the chart. You see that the trade ended up in the red after all. Try to understand what exactly in this chart you might have overlooked that led to a losing trade. Maybe you really did miss something, and in this way you can increase the percentage of successful trades. There is also the fact that a trader with a small deposit doesn't really feel the profit. For example, he sees that his deposit is $100 and in a day he earned 5% capital growth in one day is actually a very good result. But the person sees that it's only $5 and it makes him feel uneasy. He starts to increase the risks. You should also avoid this. It's also a good idea to regularly, for example every week, increase your deposit by adding new funds. This way, you'll be growing it not only by making profitable trades, but also by adding money from external sources. That is, by supplementing it from your main source of income. In this way, you will grow exponentially faster and faster each time. Let's move on to the practical part and talk about how to open trades correctly and what amount to use if you have a small deposit. Under no circumstances should you use the strategy of doubling down or averaging, also known as the martingale, because your amount is really small. The minimum entry amount on the platform is $1, and you won't have enough opportunities to average out, which is essentially what allows you to use this strategy. Moreover, this is actually a very high risk idea, because if things go wrong and you don't have enough for 4 or 5 doubling attempts, you lose absolutely everything. Yes, it can be used correctly in certain situations. But today we're not talking about that. We're talking about conservative, steady growth of your deposit. That's why a classic trading strategy will suit you, where you enter trades with 0.5% or 1% of your total capital. For example, let's say you made a deposit of $100. You would trade with just $1 per trade. And in this way, you gradually try to increase your total capital in your account. All right, guys, I suggest we move directly to the platform and take a look at what we should be paying attention to here. Of course, ideally, you should fully familiarize yourself with the platform's interface so you understand what features you can actually use. But I'll highlight the points that you should definitely take note of. Since you are trading using the classic money management system, meaning you enter a trade with about 1%, you should completely avoid assets with a payout of less than 92%. For example, right now I'm on the Chainlink asset, a closed OTC market with a payout of 64%, which is very, very low. Of course, you can trade these assets as well. But when we're talking about a small deposit, of course, we should focus exclusively on assets with a 92% payout. You should also keep in mind that if you open 100 trades at $1 each and 50% of them are successful while the other 50% are losing trades in, other words, a 50-50 split your deposit will gradually move towards zero, unfortunately. That's why you need to maintain at least 55% successful trades. In other words, out of 100 trades, 55 should be winning trades that are profitable. Then your deposit will gradually increase. The next thing you need to understand is how the market works. You need to understand its structure. You should recognize that in principle, there are only three types of chart movements: sideways movement, an uptrend, and a downtrend. Right now, I have a 100 period moving average drawn on the chart to make it easier to determine which phase the chart is currently in. For example, we can see that our white line is pointing upward. This means that we are currently in an uptrend, and here we can open a certain type of trades. If we scroll the chart back a bit, we'll see that previously it was in a downtrend because our moving average was pointing downwards. In other words, our line combines the sum of all the candles we have specifically. The sum of 100 candles and shows their average value. That's why, based on this principle, you can determine which phase we are currently in. And we also see an element on the chart when our white line was somewhere in the middle of the chart. This means that we are moving in a sideways trend. The next thing in the market that you absolutely need to know and understand 100% before you even start trading is support and resistance levels. There's nothing complicated about this. For example, let's rewind a bit. During this sideways movement, we can draw a support level. That is, it's an approximate area that the chart has approached an indefinite number of times. We can display it, say, as a rectangle. A tip will pop up somewhere here in the video, and you can follow it to a video where I cover this topic in more detail. We need to understand from which areas the chart is most likely to bounce both at the bottom and at the top. This will help you with a strategy that I'll present a bit later in this video. And the last preparatory point, let's say, that you also need to understand for successful trading is how candlesticks behave and what information they actually give us. We also have a comprehensive video on this topic. Once again, a prompt will pop up. Now you can follow it and fully familiarize yourself with the material so you can understand and navigate these small signals that the market gives and presents to us every minute. So let's finally get to the best part of the strategy itself, which on average delivers 70 successful trades out of 100. What do we need to do? First of all, let's add our moving average, the very same white line, so we can see what stage the market is currently in, because this will be very useful for us. We go to the indicator section and add the moving average. Now we need to tweak it a bit, right? So we click on the pencil icon, set the period to 100 and change the SMA to EMA. This way, we'll get more accurate data on the overall volatility of the chart, which is exactly what we need. Let's also go to the appearance settings, set its thickness to 3 pixels and make it white so that it stands out and we can easily use it later on. The next thing we need to add is our main indicator. I recommend this particular strategy for beginners because it's straightforward. There's no need to get bogged down with technical analysis here. Basically, the indicators themselves do most of the work, making it very easy to identify entry points for our trades. Once again, we go to the indicator section and add the Keltner indicator. Keltner Channel, we can see that there are 3 bands here, shaded in blue. Now I'll gradually explain what's actually happening here. Let's click on the pencil icon again and increase our multiplier to 2. Also, let's go to the appearance settings and change the line thickness from 1 pixel to 2 so that we can see our indicator more clearly on the chart. We can leave the background blue. Basically, this doesn't affect anything. You can color it however is most convenient or visually appealing for you and so on. Click Save. So what do we have now? What is the essence of this indicator? Anyway, we see 3 bands. Basically, the middle band is just a moving average. That is a simple moving average. It shows us the average price only calculated over a shorter period than our main white line. And we also see 1 line above and 1 line below. The Keltner indicator is based on the idea that the chart always tends to return to its average value. And at the moment when we go beyond our upper blue line, we can, with high probability, expect the price to decrease back toward our middle line. That is, when the chart goes beyond our blue, let's say cloud if, it breaks out above this boundary, we open a sell trade. If it breaks out below the lower boundary, we open a buy trade. But it's not that simple. This indicator works best precisely during sideways movement. That is, if we are in an uptrend or downtrend, there will be a lot of false signals. This is where our thick white line comes in to help us. In other words, we should look for those moments on the chart when our white line is running more or less perpendicular to the price chart itself. That is, it will be almost flat. For example, take this moment here. Let's see what was happening here. We can see that in this area, our chart broke out of the boundaries and in fact moved toward our average value. That is, it went down. Here, the signal was successful. Again, we see that the chart breaks out of the boundaries here. And once again, we would have had a successful trade. We see this again here. And again, we would have had a successful trade. We see it once more here yet another successful trade. You see, 4 out of 4 trades would have been successful. Though of course, this is clear in hindsight. But it really does work like this. The percentage of successful trades is actually very good. So what you need to do is look for assets with a 92% payout where we'll see sideways movement. For example, this isn't the most suitable option because our chart is only just starting to move into some kind of more or less sideways trend. So we can switch further. For example, Bitcoin ETF. Looking at it, this one also doesn't suit us. And later on, I'll show you exactly which charts we should ideally be looking for and where we can actually open our trades. All right, let's move on to practice. As I promised, now we'll find those very situations where we can enter the market. I've already transferred all my main funds to another account and left myself $100 so that basically I can feel like that very beginner, yes, a trader, a player in this market. And let me show you how the process of searching for trades actually happens in real life. We go to assets, immediately select currency, since there are more assets here with a 92% payout, and we start slowly clicking through and looking for suitable signals. Right away, the first asset, and we see a more or less interesting trade because our white line is behaving quite steadily, moving roughly in the middle. And we just recently went beyond the boundaries of our blue channel. You see, we were trading a bit higher, but now we've already come back down, so we shouldn't take the risk. And it's better to find something else. I recommend staying on the 1-minute chart and opening a trade for about 3 minutes. You can also trade on the 30-second chart and enter for 1.5 minutes. But I recommend it as it works a little better this way. The success rate is slightly higher, specifically on the 1-minute chart. That's why we don't take risks. And remember that stability and certain rules are important to us. We can try to wait again for the price to go beyond our blue chart range, but it's better if we just move on and click through other assets. I click through and see that the chart is within the blue range, which means it doesn't suit us. And so basically we keep clicking and continue our search until we find that very candle, just like basically right now. We see that the chart has been behaving more or less steadily, at least up to this point. And right now, we are actually moving beyond the blue chart range. This means we can take our $1, which is equal to 1% of our total capital. And right now, we can open a buy trade. We open the trade right at the border with a lower blue line. It's even better to do this lower if possible. And congratulations, our first trade is open. Let's wait for the result after all. Well, dear friends, here is our first successful trade. We earned 92 cents. And no, that doesn't sound funny. I assure you, it is with these small steps that we will move towards a truly large deposit, a significant capital. What I want to draw your attention to is that at the moment when we opened the trade, the payout was 92%, but now it is already 89%. Therefore, this value is dynamic. You should always pay attention to this and understand that the payout percentage may change not in your favor. I also want to add a few words about why we are trading specifically on the 1-minute chart and why this is a more ideal approach compared to trading on 5, 10 or 15 seconds. This is because the Keltner strategy really starts to work more or less effectively from the 1-minute range. Because if we trade on 5-second charts, the price movement is too chaotic and a single buyer or seller has too much influence on the market. That's why the moving average strategy doesn't work quite correctly in this context. So if you're willing to accept that you'll have to wait longer, you can basically trade on 3-minute charts and open a trade, say for 9 minutes. Maybe it will only slightly increase your success rate literally by 1 or 2 trades out of 100. But if you want to reduce risks even further, then this is basically an optimal idea. However, you can also trade on the 1-minute chart like I do, because that way you'll open more trades, which is also perfectly valid. All right, let's move on to our next step. Basically, that's exactly how it works. We simply click through the assets one by one, searching for that moment when the chart moves outside our blue cloud. I think you've already grasped the main idea. For example, right now, once again, our white line is moving roughly in the middle without any significant deviations. So we open a 3-minute trade for the same dollar amount. We absolutely do not increase the amount of our entry. We open an upward trade and we'll watch to see if the price pulls back basically to our average value somewhere within this range. Let's wait. So unfortunately, we lost $1. That happens. It's absolutely normal. And let's return to the earlier point I mentioned at the beginning of the video about analyzing your mistakes. What exactly was overlooked here and what can be worked on to avoid making this mistake in the future? You see, I also made a mistake and fell for the same trap. But in this way, it's actually a more visual demonstration of the mistake itself. We can see that our white moving average is roughly running through the middle. But if you remember, at the beginning of the video, I talked about how important it is to see and understand the approximate levels of support and resistance. And we can see that a certain range has formed here, right, within which the chart is moving. We can see it by drawing these horizontal lines. Yes, our zones are actually quite large. That is, if you draw them using a rectangle, you can show that the resistance zone, for example, would look something like this. This is how you could display it, and let's mark it at the bottom as well. So basically, there isn't a precise level here, but overall, we can demonstrate this range. If we extend the chart like this, we can see that the price moved beyond the lower boundary of our range, and we opened the trade right here. So essentially, our sideways movement changed, and everything shifted into a downtrend, while the moving average simply didn't have time to react to it. That's why we take note of this, and we'll keep it in mind for our future trades. You should do exactly the same and pay attention to potential areas of support and resistance. It's no big deal, we lost $1, let's keep trading. All right, let's continue our slow but steady journey to growing our deposit. We'll keep reviewing assets in real time. I'm thinking that after this trade, I'll start skipping this part so the video doesn't drag on, but I think it will be very useful for you to see how exactly this process should look for you. We continue clicking through our currency pairs, and again, what do we see? It's also important to note that if you're having a bit of trouble figuring out what stage the market is currently in, you can switch to a higher time frame. For example, you can go back 3 minutes and see that we have a very strong downward movement here. This is obvious to the naked eye. If you draw a trend line on our chart, you'll see it's clearly moving sharply downward. So of course, this is not a suitable situation for entering a trade, but we can also see this from our white line. All right, guys, this is an excellent situation to enter a trade. In fact, that's exactly what I just did for 3 minutes with $1. Yes, without changing our initial amount, we entered a sell position. Let's switch to a higher time frame and see what's going on here. As we can see, the chart overall is moving sideways, right? So if we once again mark out our estimated 100% buyer zone, right? Then here you can find something. Yes, there was a trending movement here, of course, but it wasn't that strong. So this situation is still in principle acceptable, right? Because now we've actually moved into a sideways range. That's why this is the optimal scenario for entering a trade. There isn't the mistake here that we made earlier, especially since the chart is currently at the top. It has moved beyond our blue line and we actually opened the sell trade. Everything is according to the rules. The price managed to enter this range just a little bit, but moments like these are impossible to control. We still have 2 minutes left. We just need to wait for the result. Well, friends, the next advantage is a profitable trade. Excellent. Once again, our balance is in the black. That means we can move on to the next chart and look for another entry point. The chart for this currency pair has dropped quite well, actually. Yes, we've reached our average value, just as our strategy suggests. Let's keep looking. So literally 10 seconds have passed and I immediately spotted another situation that suits us more than well. Let's, as usual, check the conditions. I don't check them after I've entered the trade. I just quickly look at them first so I don't miss our entry point. Here, it's a 3-minute time frame, so we're in the blue zone, but for the duration of our trade, everything is fine. We can see that overall, we're in a sideways movement. Again, we can identify our support zone, yes, using a rectangle like this. It's located roughly here, and below we're still at an angle, yes. There's a trend line. It will be difficult to find perfectly straight charts, but overall, since we're on top and considering that we are now on the 1-minute time frame, we still make our decision based on this chart. And here it bounces back and forth very, very nicely. If we draw a support line on a 1-minute time frame, we'll see that it really does look a lot like that very sideways movement. We've moved outside our blue cloud, right? We open a trade. Overall, everything is great. I think by your 4th trade, you've already understood all the nuances and will be able to easily repeat the same thing on your real trading account. Well, that's another win. Our trading balance is already growing, yes, in geometric progression. Excellent. As you can see, so far we aren't making the mistakes that led to our losing trade, and we are avoiding losing trades altogether. Of course, even if you analyze the chart perfectly and do everything according to the rules I've outlined, there can still be losing trades. That's normal. The percentage we're aiming for is about 70 out of 100 profitable trades. But so far, everything is going more than well. In general, on average, that's how this strategy performs. Let's keep going. So what's our next trade? Yes, I already opened it a minute ago. I didn't have time to hit record and show it. So while this trade is moving toward its logical conclusion, let me show you what's happening here with the euro-ruble pair. We can see a range. We can start from about here, demonstrate and extend RS, triangle. And there it is, the very one I just drew. So basically, this is our potential area of interest for sellers. We've even broken through it a bit. We've also moved above our upper blue Keltner line. Accordingly, this is a good entry point. I would even say it's excellent to enter right here after such a tall green candle. And also, notice how high we are relative to our white midline. Yes, the 1 for 100 periods. One might think that we're moving into an uptrend, but thanks to the fact that we see this level here, and if you extend the chart a bit further, you can see that it has basically been at this level for quite a while. Yes, just 15 or 20 minutes ago, this makes it a good entry point. Now we can already see that despite there still being 50 seconds left, we're slowly starting to move toward the middle. Most likely, this trade will be successful. So let's fast forward and wait to see the result. Well guys, yes, that was another one of our positive trades with a successful outcome. And in our account, we can see $2.68 in profit. Let's count how many trades we had in total today and how many of them were profitable. We won't count this trade for $0.50 that was before the experiment started. As we can see, we started our trading at 1603. We had 5 trades and 4 of them were profitable. So basically, in 45 minutes, we made our $2.68. And you might say, why so little? But remember, we treat our deposit amount as if it were $100,000, right? So imagine you earn $2,680. In that case, it would be great for you. But it's with these small steps that we'll continue moving forward to grow our deposit. So if we had traded for another hour or 2 in general, a person can, depending on their free time, trade for about 2 hours a day. That means we would have earned, well, about $5. From 4 to 5, as I said, the average profitability is about 70%. For us, 4 out of 5 trades is 80%. So basically, we would have earned, let's say, $4. If you multiply that by 31 days, you get $120, which is roughly a 100 to 120% increase to your deposit each month. So after just 1 month, you would have about $200, and after another month you would have $400, because precisely when you double your capital, for example, when you go from $100 to $200, you can increase your initial amount. That is, instead of trading with $1, you can trade with 2. So $2 per trade. Let's sum up this video. Today, I pointed out all the main mistakes that beginners make when they first enter the market and start trading. I outlined all the rules that you basically need to follow and stick to. Let me list all the points you should study, right? With 100% certainty, they will affect the final outcome of your balance. And I showed a strategy that is perfectly suited for beginners. It's not complicated, it has high profitability, and I demonstrated in practice how you can slowly and steadily grow your deposit. Yes, this is not about rapidly boosting your deposit. Of course, you won't make hundreds of times your money in a short period, although we do have those kinds of formats as well. But you need to understand that this is an extremely low-risk, conservative strategy. By using this particular strategy, you will slowly and steadily grow your deposit. And as I mentioned, it yields about 100% on your deposit per month approximately. Accordingly, after 3 months, you'll already be able to grow your account from $100 to the range of $1,000, right? And that will already be a completely different amount of money. And if you also use the life hack of adding some extra funds from your main source of income, your capital will grow faster and faster. But the most important thing you will get during this period is experience. Trading experience. You'll make some mistakes along the way, but overall, you'll be ready to trade with larger amounts and earn bigger profits. And finally, I want to show you a compound interest calculator. This is an absolutely basic and simple calculator. You just type it into Google. I want to demonstrate it so that every time you feel the urge to increase your amount and take on more risk, you can come here and see how much you can actually earn. Even if you really want to increase your risk, finally don't wait until you have $200 to raise your initial entry amount to 2. Trade 1% each time. You can, for example, if it comes to that, every time your balance grows a little, calculate 1% of it and use that amount to enter a trade, right? That's the most extreme thing you can do in terms of increasing your risk. And let's see what happens if over 124 days, that's about 4 months with an average daily return of 4%, you trade starting from $100. As you can see, by the end on the 124th day, this is the kind of amount you could have in your account. Of course, sometimes your returns will be higher, sometimes lower. And it's possible that you won't be trading all 121 days. But even if you only trade, say, 70 of those days, you can see that the amount is already more than interesting, considering you started with just $100. But also, at the end of this video, I want to tell you about our gift from the Pocket Option platform. If you follow the link in the description right now and enter the promo code, you'll get an extra 50% on your first deposit. And now you can start not with $100, but with $150. This will bring you much closer to the highest positive results that we all strive for. But with that, we'll be wrapping up our video. Be sure to check out our other videos on trading, strategies, and the rules you need to follow. We'll keep working to bring you educational, interesting, and also entertaining content. See you in the next videos.